Hello, I'm Laura Painter. Welcome to this episode of Dollars and Cents. Today we're talking about investment success and how to avoid common mistakes that could cost you money. So let's get right to it. It's no secret making the most of your money is an important tool for financial success. And investing is a way of putting your money to work. Basically, making money with your money. I sat down with Joseph Eshelman of Tower Point Wealth to talk about 3 common investment mistakes to be aware of that could be costing you money.
But when it comes to investing and having success in investing, the less emotion you can have, the more objectivity you can have, I think overall long term you'll have a higher probability of success.
Number 1, emotional investing. Fear and greed are powerful emotions. When it comes to money, don't let them steer you off track. Sacramento-based financial planner Joseph Eshelman says you could be tempted to make bad decisions, even if the economy is doing well or doing poorly. So stay rational and objective and stick with your plan. Number 2, information overload. We can't get enough of our phones these days. But with advertisements on social media, emails, and even texts from our friends, information spreads fast. And not all of it is, shall we say, helpful, especially when it comes to investment advice.
Inherently, there's some sizzle and some sexiness to those type of ideas. It does kind of fly in the face of having a cohesive overall objective plan in place and to not just be grabbing at all these different shiny ideas.
Joseph warns you not to fall for hype, trends, or alluring headlines. He suggests you be steadfast in your strategy and don't be distracted or gamble for short-term gains. Number 3, Uncle Sam. There's no avoiding taxes, so don't let your dislike for taxes keep you from helping your money grow. For example, one investment you can make is owning bonds. The interest you earn on California municipal bonds are tax-free, and that's good news. But the interest rate is lower on California municipal bonds than some other bonds that are taxed.
If you have a California municipal bond at 2%, you're not paying any tax, so you net 2%. If you have a regular bond that's paying 4%, maybe you pay 1% in taxes, but you're still netting 3 overall.
Bottom line, crunch the numbers on your investments. You could still end up earning more money even if you had to pay taxes on it.
So we just heard about investment mistakes to be aware of and to avoid. So now let's take a closer look at where you're putting your money and how it could be coming out. Here's more of my conversation with Joseph Eshelman.
We can't predict, the future and know exactly what's going to go up in value and what's going to go down in value and how things are going to shake out.
Mistake number 1, lack of variety. Sacramento-based financial planner Joseph Eshelman recommends you don't put all your eggs in one basket. Have variety in your investments, and they can be big or small. For example, savings accounts, 401ks, real estate, or even cryptocurrency.
Take a more diversified approach that you have a problem in one area of the portfolio, hopefully other areas of the portfolio are doing well to kind of smooth out some of the speed bumps along the way.
Mistake number 2, following the bandwagon.
It feels good as a human being to move and do what the herd is doing.
When it comes to your investments, following the herd blindly could cost you.
But oftentimes, being a bit more of a contrarian can sometimes pay longer-term benefit. Just because everyone thinks an idea or a concept or an economic trend is going to happen over the next 3, 6, 9, 12, just because everyone thinks that doesn't mean it's going to be true.
Instead, have a well-thought-out process that works well for you and what you're comfortable with. And finally, mistake number 3, fees and expenses. While it's nearly impossible to avoid certain fees and expenses when you're dealing with your investments, you could be losing some hard-earned money if you're not paying attention to the money going out. Watch for expensive investments, mutual funds, commissions, and trading costs.
Not to suggest that people shouldn't be compensated for their time and for their services, but at the same time, there's some responsibility to the investor to do what they can to keep that stuff minimized.
If you're feeling overwhelmed by this information, just remember the phrase, crawl, walk, run.
The more educated you are, the better investor you'll be, and it's not going to all come at once, but that's okay, and just try to glean a few of these tidbits.
And that's all for today. Thank you for watching this episode of Dollars and Cents. I'm Laura Painter. If you want to watch more features just like this one, check out our ABC 10 Plus app. There you'll find the latest newscasts and headlines and stay up to date on the weather and see all the great work and stories we tell here at ABC 10. Thanks again for watching. Take care.